This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Another week where there were still, earnings, more than a dozen retailers, and then, Tim, we know, the big one, NVIDIA.
Yeah, people use the term blowout quarter a lot. This was actually a blowout quarter for NVIDIA.
Absolutely, and the stock was moving on the news. All right, we'll kind of get to that a little bit later on. Politics also front and center as former President Donald Trump, Rudy Giuliani, and others turned themselves into Georgia authorities as part of the criminal case related to the 2020 presidential election. And then, of course, the Kansas City Fed's annual gathering in Jackson Hole put monetary policy front and center again.
With the economy in mind, we'll explore the cost of climate change and extreme heat when it comes to American productivity, in addition to their deadly toll on our fellow citizens.
Plus, more details on the highly anticipated IPO of the British chip designer ARM Holdings and why the company needed more than 3,500 words in its prospectus to explain the risks it faces when it comes to China.
All that to come. We begin with the past week's kickoff to the 2024 presidential election as 8 Republican hopefuls squared off in their first debate in Milwaukee, with each looking to break Donald Trump's grip on the party's voters. And yet only one seems to really be trying. Former New Jersey Governor Chris Christie.
We have to dispense with the person who said that we need to suspend the Constitution to put forward his political career. Mike Pence said no, and he deserves credit for it.
That was former Governor Christie going after the former president and praising then Vice President Mike Pence on the debate stage. Yet herein lies the rub. Long before Christie devoted himself to stopping Trump, he helped anoint him, becoming the first Republican candidate to drop out and endorse Donald Trump back in 2016.
Ahead of the debate and writing about Chris Christie in this week's issue of Bloomberg Businessweek is the magazine's national correspondent, Josh Green, who offered up some insights into the long shot strategy.
As I was looking at the race and looking at the field, one guy stood out, and that was Chris Christie, because Christie is a famously aggressive debater, very effective. He's a big, larger-than-life character. And this cycle, he's the only Republican character who's really going after Donald Trump with both barrels. So it looked like that this could be a kind of inflection point in the race, one that kind of lent itself to Christie's talents. And so I went and traveled with him around South Carolina, New Hampshire, talked to him about what his plan had been and how he had gone from being an important Trump endorser in 2016 to today running against him as Trump's loudest critic.
Tell us about your time spent with Chris Christie and what you kind of took away from that. And I am curious about how you maybe challenged him about, wait a minute, you were his friend, now you're his critic. Are you going to go back to being his friend? Talk to us about that.
Yeah, I mean, it was fascinating from kind of an anthropological standpoint because I went down to South Carolina with Christie. Trump is very popular with Republicans still. And so I was expecting a lot of kind of Trump MAGA people to be in there shouting down Christie and all sorts of confrontation. And instead what I found was just the opposite. It was almost like a group therapy session of, Republicans, some of whom driven for hours and even from other states to kind of come and commune with Christie and kind of find a crowd of people who were Republicans but didn't like Donald Trump. There's sort of fewer and fewer numbers these days. And all of them were sort of worshipful of Chris Christie. So it's really interesting to see that for all that we see on the news and on social media about how popular Trump continues to be, despite indictments, despite impeachments, there still is a group of Republicans who are never Trumpers and who are hoping that Trump won't be the nominee in 2024. I think the problem for Christie and the challenge for Christie is that there aren't enough of them to win him the nomination.
That's what I was just going to ask you.
To have a broader appeal.
Yeah, I was just going to ask you if there are enough of those to actually help him get a nomination. I mean, in an alternate universe, certainly, that could work. So, Josh, what about Chris Christie today? Who is he? And sort of how did he recover from what happened at the end of his term with the old, time for some traffic problems in Fort Lee thing?
Exactly. Well, I mean, look, let's remember, Christie at one point was the rising star of the Republican Party before Donald Trump came along, popular blue state governor, could have run for president against Obama in 2012, chose to wait, and then wound up in trouble with the George Washington Bridge scandal that tarnished the end of his presidency. But he jumped in anyway in 2016 and looked like a viable candidate until Trump came along and kind of stole his shtick as the kind of the confrontational, outer borough, poke a finger in your chest guy. He just did it better. And so when Christie recognized that he wasn't going to be the nominee, he made a move to become Trump's VP and became the first guy to endorse him. And so that shocked a lot of people because at the time,
it's like, can I just say, it's like watching The Bachelorette, and it's that Bachelorette that just doesn't have a chance, but like just going for the rose. It was like
Christie
painful
was
to watch.
Sorry. And instead, it went to Mike Pence, and he wound up kind of getting humiliated. He got fired from Trump's transition. And I think his reputation was really kind of in tatters. As the Trump administration went off the rails, a lot of people, Republicans and Democrats, I think scorned Christie for having enabled Trump. And so one of the things that I think is going on, and I get at this in the piece, and I talked to Christie about it, is he really running for the Republican nomination? Does he really think he can beat Trump? Or is he really aiming here for personal redemption? Because if he does manage to stop Trump, even if he himself is not the nominee, I think a lot of people will be very thankful, and that he'll, in a sense, redeem himself in a tone for how he helped Donald Trump 7 years ago.
Well, don't you feel like, Josh, and that's where I put a note as I read through your story, his impact if he doesn't get the nomination, and you get to it. Is it just the point that this is someone who actually is standing up and kind of poking the bear and saying, wait a minute, you did this, you did that, is this what we want for a president? So, is that how he redeems himself ultimately? And then is that going to be useful politically? Will it change the minds of voters?
Well, I think what he's trying to do there is essentially bait Trump into attacking him. Like, the challenge for all of these candidates is they need to emerge as the main anti-Trump alternative. For a while, it looked like that was going to be Ron DeSantis, but DeSantis is now in a tailspin. So if Christie, his hope was to get on a debate stage with Trump and kind of go mano a mano and beat him up and hope that Republicans recognize that, hey, there's a new sheriff in town. Christie is also this tough guy. Maybe we should switch our allegiance to him. Well, he doesn't have that option now, and Chris Christie can still stand out from the rest of the pack by going after Trump. I think the question is, will Republican voters follow him there? And the early polling evidence is that they won't. And I sat down with Christie and asked him about that, and he said essentially, listen, I know none of you guys in the media and none of the pollsters believe that I'm going to beat Trump. But when I do, when I go out there and beat him up in the debates, and his own voters see that, they're going to think to themselves, and this is a quote from Chris Christie to me, okay, he did that to Trump. What in God's name will he do to Joe Biden? And at that point, Christie is hoping that they'll switch their allegiance. Mm-hmm. That is the theory. We don't have a lot of evidence yet to suggest that it's going to pan out that way, but I would point out that there's a new Republican poll out, and sure enough, Chris Christie has leapfrogged Ron DeSantis and now stands in second place behind Donald Trump.
Wow.
So still within the realm of possibility. A lot of it is going to depend on how Christie does in the debate.
So it could happen, but let's say it doesn't happen. And let's say that former President Trump is, once again, for a third time, Republican nominee Trump. What happens to Chris Christie then? Does he do what so many other never-Trumpers did and gather around and say, well, I guess he is the Republican nominee and we'd rather see him as president than Joe Biden?
It's a great question, and it's one that Christie ducks by saying he doesn't think that that's going to happen. But it's really tough to go from being anti-Trump to pro-Trump to anti-Trump to back to pro-Trump. At some point, you have to put on a neck brace from all that whiplash. I think what Christie is really hoping for, that no matter how things turned out, that he's redeemed himself in the eyes of the political world to an extent, simply by fighting the good fight that the other Republican candidates don't seem to be willing to, and trying to stop Donald Trump. Now, that might not get him an important political job, but look, hey, maybe in 4 years, if the Trump era passes, maybe if the party sours on Trump and nominates somebody else, a Ron DeSantis, a Tim Scott, Christie will come to look like a brave guy, like a prophet, and maybe find a role for himself in politics as perhaps an attorney general, or maybe 4 years from now, 8 years ago. He's only 60 years old, which is like adolescence in national politics. He could theoretically run for president in a future cycle where the MAGA vote isn't as powerful and still have a chance. So I think the main thing.
What is this world you describe, Josh?
Well, it's on a far off on a distant planet.
Okay.
But, people have been predicting for years and years that eventually Trump's hold on the Republican Party would break. But look, if he loses the election in 2024 to Joe Biden, I think that's going to go a long way towards severing the party's connection to Trump. And if he wins, he can only serve one term. So there is the light at the end of the tunnel for non-Trump Republicans, just in the sense that, eventually Trump can't be the president anymore, and somebody else is going to kind of get that role. So I think Christie is also acting with an eye toward what that future might look like. But, of course, he's banking on the fact that we'll have to look very, very different than our Republican president does today.
That was Bloomberg Businessweek national correspondent Josh Green. You can hear more from him and his outlook for the Republican presidential field on our podcast feed.
Coming up, we examine the cost of climate change and why it affects way more businesses than you might think.
Economist Claudia Sahm helps break down the data when we come back. You're listening to Bloomberg Businessweek. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Okay, yes, we focused on Jackson Hole and Jay Powell and all the global central bankers in attendance at the Kansas City Fed's annual gathering. A little talk of fly fishing as well. You can read all about it, though, on the Bloomberg and also at Bloomberg.com. And yet, what we keep thinking a lot about is climate change, the impact, the lives lost, the costs, the productivity hits.
Yeah, another week with extreme weather and incredibly distressing headlines. The aftermath of Tropical Storm Hillary pummeling California and other parts of the western U.S. Overall, Carol, the nation is on track to experience its worst year for smoke exposure in decades. This after wildfires in Canada sent toxic plumes drifting across the border to the Midwest and the East Coast earlier this summer. And then, of course, there's Maui, where fires have pushed the official death toll into triple digits, with more than 1,000 people still unaccounted for.
And just remember, climate change, it's a global thing. Fires and floods are tragedies, of course. One of our next guests writes that we also shouldn't discount the economic damage caused by higher temperatures. Claudia Sahm is the founder of Sahm Consulting, a former Fed economist. She's also the creator of the Sahm Rule, a recession indicator, and she writes for Bloomberg Opinion.
Claudia's latest article on The Terminal discusses how heat drags on economic productivity. She and Bloomberg opinion editor and climate columnist Mark Gongloff joined us with more.
There's a human tragedy, absolutely. Thinking about the economic costs, it really brings it to all of us, right? And the way in which high heat, rising temperatures, one channel, an important channel to affect the U.S. economy is through reductions in labor productivity. I mean, it's a lot hard when it's high heat. It's a lot harder to do the work, and we have almost 20% of occupations in the United States have heat exposure. It's not just agricultural workers; it's also utilities, construction workers. So there's a wide group of people that are affected by the high heat, and it shows up in the economy.
Yeah, it's, as we talk about the costs, and first and foremost, the loss of human life and the devastation, obviously front and center. But yeah, we have to start looking at this increasingly. We talk about it a lot. I feel like have for years and years. But man, I feel like we're paying the piper now. We're really getting some real numbers in terms of all this costs. I want to go to you, Mark, because as every day there is new stuff that is related to our climate, volatile weather patterns, and so on. When you hear Claudia speak, this is just going to continue, correct? Because at this point, we can't really slow the train, if you will.
Well, we could slow the train, but only by making some drastic choices, by making some different choices about how we produce energy. And her great column reminded me, and it's one piece of a thing that I've kind of been going on about for a while now, which is, we talk a lot about the costs of the clean energy transition. It costs a lot of money to upgrade our infrastructure, to put in charging stations, to build out solar and wind, although it's much cheaper than building a coal plant. But still, people complain about the costs, and the costs will be high, but to me, I think we need to think of them as investments because the costs of not doing that are so great. And I think Claudia, I was just doing some very rough math. Claudia is the economist, I am not. But, if by 2050 we could be losing $300 billion a year from heat-related productivity losses alone in the U.S. economy, and then you get into other economies and then all the other effects that we're seeing. And again, you just ran through the gamut of all the climate disasters we're seeing in the past couple of months. Those are all extremely costly, and they lead to long-term health costs too, and that we haven't even begun to really tally up. And so the costs of not doing anything are much greater than the cost of doing something about this.
Well, Claudia, talk a little bit about that, because, perhaps the idea that, when we talk about costs, we don't associate what Mark is talking about, right? We don't dissociate the costs that you write about. When people talk about costs, they think about how much it costs to actually do things rather than, subtractive costs, right? How much these disasters remove and take away from productivity. From a behavioral perspective, how do we shift the conversation to actually do this in a way that's, really productive?
It's hard. I mean, and one of the things I talk about in the piece is the human costs, the economic costs. They often are most for lower income workers, communities that have, their housing isn't such that it makes it comfortable when the temperature is high. And so you have to recognize, we have a problem now, right? You can disagree about how much happens in the future with climate change, impacts, how much we can adapt. And yet right now we are losing productivity because we're not dealing with these high temperatures. And frankly, there are very few attempts to even try to locally mitigate some of the effects on workers. And we're not even doing a good job at that.
What's the turning point, I guess? Like, I'm going to be really obnoxious, but is it when the gardener doesn't show up because it's so hot and they can't work in this? What is it that makes, Mark, people maybe pay more attention? We've had conversations. We've started to have more conversations with you about this. Climate change, the volatility, not a new thing. But I keep wondering, I always thought, okay, wait, if you can make money off of this, ultimately people will sit up and take notice. What is it that ultimately makes people think more about the impact, the financial impact, and do the right thing?
I think they are starting to
human impact.
Yeah, well, the human impact is one thing. And there was a study out that suggested that people are more likely to take action when they're angry. So that's one thing. Maybe seeing people, maybe having your home destroyed and seeing people you love fall ill to this stuff will make you angry. But in terms of what we can do right now, there are things we can do right now to protect workers, and we are starting to talk about this more because we are seeing workers dying from extreme heat. And OSHA was supposed to. President Biden told OSHA 2 years ago to set some federal safety standards for workers, and they still haven't done it. And they're getting another push right now because this summer has been so extreme. And so we are starting to think about it. We are starting to talk about it. Unfortunately, though, it is a case where we seem to need to be smacked in the face with it. To be somewhat optimistic, I think just this one disaster after another that we're seeing that will be costly. I mean, we're seeing more billion-dollar disasters coming than ever before. FEMA is about to run out of money, and we're not even in the height of hurricane season yet, which is a scary thing. It's got enough money to cover Maui, but what will it? Then it's going to have to spend a bunch more money to cover the flooding in California, and then we still haven't even started hurricane season really yet. We could hope for a break there. We could hope for an end to these disasters, but we've had 3 or 4 months of them steadily, and those are the kind of things that might really start to get attention when the money's run out and disasters are piling up.
Right. Well, we hope we can continue this conversation with you both, because really smart voices and perspectives on this. Mark Ungloff, editor of Bloomberg Opinion on Zoom in New York City. Claudia Sahm, founder of Sahm Consulting, Bloomberg Opinion columnist on Zoom from D.C. It reminds me, there's a story on the Bloomberg. Bond investors can't rely on credit ratings to give them a fair assessment of the climate risk they're exposed to and should brace for trouble ahead. That's according to the Institute for Energy Economics and Financial Analysis. So it's real, folks.
Still ahead on Bloomberg Businessweek, our magazine team spotlights the prescription benefit managers, or PBMs, that many of us rely on, and explains why they're increasingly accused of driving drug prices higher rather than helping to keep them down.
What the PBMs say is that they lower drug prices by getting these, they lower net costs by getting these rebates and other discounts from the pharma companies. They aggregate buying power, they aggregate demand, and they can go to the table with pharma and say, give us money back on these drugs. The question is, where does that go, and who really benefits from it? This
is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
PBMs, pharmacy benefit managers. They negotiate cheaper prices for employers and health plans. That's the goal. But as our Bloomberg Businessweek team reports, these same entities are also pocketing drug makers' cash. And they're under fire from all directions right now. Blue Shield of California, about 1 week ago, said it would replace some services from CVS Health's Caremark PBM with an amalgam of rival offerings. And that sent shares of CVS sliding.
An array of officials, from Federal Trade Commission Chair Lena Khan to Florida Governor Ron DeSantis, they want more transparency from these PBMs. A story in the business section of the new issue of the magazine details how these PBMs actually grab extra money from the very parties they're supposed to be playing hardball against. For more, let's bring in the author of the story, Bloomberg News healthcare reporter John Tozzi, along with the editor of Bloomberg Businessweek, Joel Weber.
Well, I just had no idea how lucrative it is to get between, you and your prescriptions. And it turns out that we're not alone in how that feels like a big deal. And that even places like the FTC has also shown an interest. John has been on this for a while and kept me abreast of his interest in it. And so I was really glad to see it. But how does this break down, John? Because the very people who are supposed to be keeping our drug prices affordable maybe don't have my best interests at heart.
Yeah, so this has been an issue in...
Go figure.
You were just, you look like somebody that we could, take advantage of.
I'm sorry, John.
This has been an issue in the industry for a long time. People who followed it know about rebates. So basically what happens is you go to the pharmacy, you fill a prescription, your health plan pays the full dollar amount of that prescription. And then after the fact, at some point, the drug manufacturer, the pharma company, sends a rebate for part of the value of the drug to your pharmacy benefit manager. And the pharmacy benefit manager sends part or all of that rebate back to your health plan. And this is something that has been debated for years, how much of the rebate gets passed through. Employers and other people who pay for healthcare have said, we need to have 100% of the rebates passed through. There's been this increasing pressure to kind of get all this money coming from the drug makers back to the people who are ultimately paying for the drug.
Okay, so Tim mentioned that there are some new players around. How is this going down within the industry? Like, this does seem like, that there's an opportunity here to, maybe take advantage of consumers, but there are other approaches that, are out there as options, right?
So, one thing to know is that there's been a tremendous amount of consolidation in the market over the years. So there are now 3 main PBMs that control about 80% of the market.
Which I hadn't realized have been around since the 60s. I don't know why I thought it was a newer thing, but forgive me. Go ahead.
Yeah. And they're also, like, those businesses are integrated with much larger companies that also own health insurance companies. You have CVS Health, which owns Aetna, United Health, which owns OptumRx PBM, Cigna, which owns Express Scripts PBM. So they have their arms in a lot of different businesses that are all related. There is growing competition in the PBM market. There are a lot of new entrants, a lot of new tech-focused companies that say they're making more transparent offerings, but they're very small, and what traction they're getting is still to be seen, because those 3 big players still dominate the market.
Do you need a PBM?
The industry says that employers are not forced to contract for PBM services, and they choose to do so anyway. And that's their position. I think realistically, there's there's not a clear alternative right now. If you're providing prescription drug coverage, this is sort of the avenue to do it. But with the blue...
How did it work before they became so dominant?
In the 1960s or before, like...
I don't know. Like, have PBMs always had a role here?
Well, I mean, one thing is, the role that prescription drugs play in healthcare has grown incredibly in that period, right? There are more new drugs, more expensive drugs every year. In the 1960s, I don't have it in front of me, but the prescription spend was, much less than it is now. So part of this is like an evolution to, new innovation on the pharma side. That's very expensive here in the United States, where, we have a free market for healthcare, and the drug makers can set their prices as high as they want. And so this is sort of an industry that's evolved in response to that. But, there are increasing questions around, how it actually works, and whether they are, whether their clients, the employers, are fully capturing the value of the discounts that they get.
Okay, so FTC has waded into this and subpoenaed affiliates of PBMs called group purchasing organizations.
Yep.
I don't usually think of the FTC and, drugs being in the same place. I think usually more like kind of big tech crackdowns. But what is the FTC's interest here?
So the FTC has subpoenaed the PBMs themselves, and then these affiliates, the group purchasing organizations, as well. I think as a competition regulator, they have, and particularly under Lina Khan, they have sort of taken a close look at this industry. They're doing what is essentially a study of competition. So it's not, it's not an enforcement action. They're kind of gathering information and will presumably produce a report at some point. But again, there has been a tremendous amount of consolidation in the industry, I think, and these are companies that have a lot of influence over what drugs are available.
Well, and I also feel like rebates is a loaded word. It just sounds like I'm getting a rebate. Like something's got to be good about it.
But when I hear rebate, I think to myself, okay, this is, a way to get you to buy something with the hope of you not actually cashing in this rebate.
Well, the thing about a rebate is by the time you get it, you've already paid for it, right? That you're not, it's not an upfront discount, although there are those two. It's, so, and then what happens to those dollars when they do flow back to the plan? How much goes to the actual patient who paid maybe the full cost of the drug if they have a high deductible?
That's what I wanted to ask you. Executives from the three big PBMs, this is in your story, said that they pass almost all the rebates they receive from drug makers back to clients. But we don't really know that, do we?
Well,
or do they?
They say they do, and in some programs, like in Medicare, there are regulations around requiring them to do that. But the other thing that we've sort of come to learn is that even as they say they're passing back almost all of the rebates, or all the rebates in some cases, there's other money they are getting from drug makers that is not called a rebate. So it's called a manufacturer administrative fee, or an inflation protection fee, or a data fee, or 5 or 6 other different terms that show up in the contracts.
Is this like my cell phone bill? Is this what this is like? Like all these crazy little bills? Anyway,
so
it sounds like it.
Well, right, and so I mean, one of the questions employers have is, how much money are these companies making from pharma companies, and it's money that is tied to the prescriptions that you and I are filling, right? And so where does that go? And that's sort of the big unanswered question in all of this.
Where does it go?
Where does it go?
Yeah. There is a bipartisan interest in perhaps regulating this space. Is this one of those areas that everyone in D.C. actually gets along about?
I think there is a lot of agreement. We've seen bipartisan bills both in the House and in the Senate from several committees. One thing, just the political context here is, last year in the Inflation Reduction Act, that took kind of a big swing at pharma, because Medicare will be able to negotiate drug prices for the first time. And PBMs are sort of kind of next up in a way that, Congress has been looking at this industry pretty closely, and we'll see if there's action on that in this session.
A great story. Our thanks to Bloomberg News healthcare reporter John Tozzi, along with the editor of Bloomberg Businessweek, Joel Weber. More on this story available on our podcast feed and, of course, in the magazine, out now online, on newsstands, and, of course, always on the Bloomberg terminal.
You're listening to Bloomberg Businessweek. Up next, there's a major red flag looming over what's expected to be the biggest IPO of 2023, and it's the flag of the People's Republic of China.
We break down the 3,500-word asterisk in ARM's prospectus when we come back. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Alex Barinka. She's writing all about ARM's China Challenge because in that 330-page IPO prospectus, the company, ARM, spent more than 3,500 words explaining the risks it faces in China. It's a lot. Alex is technology reporter for Bloomberg News. She joins us on Zoom from LA. I have to say, to be quite honest, when it crossed and we were all trying to read the filing and make sense of it, it was a little tricky, and we all knew we needed some time. You spent the time to go through it, and what'd you find out?
I did, and the kind of theme we saw in all of this, the sections, and these IPO prospectuses are hefty documents. You said 330 pages. It's basically the first look for investors to get a real deep dive on this business since SoftBank took it private years ago. And China kept popping up from that headline that Tom ran through, that about a quarter of this business is in China through its partner in that region, ARM China, but also that there are a lot of risks around this China region. If we take a step back a little bit, we've talked a lot about the geopolitical issues with China, particularly with the tech sector and with semiconductors in particular. The current presidential administration, Joe Biden and his team, have taken a really kind of adversarial stance on making sure that the Chinese government, their military, doesn't get really sophisticated semiconductor chips. Well, ARM designs a lot of those chips, the chips that run servers, AI technology, some of the most sophisticated stuff out there. They have more than 260 customers. So for them, as they look at this market, which is a quarter of their business, they are now kind of dealing with these blockades, these export controls, and a lot of those risk factors were built into the risk section that they talked to at length. The other thing I would point out, aside from these kind of geopolitical tensions that are causing some of this risks around the China region, they also pointed out that China's economy is slowing. We've seen the numbers come down. We know that the economic engine over there has slowed a little bit. So on top of that, this really important market that investors are going to have a lot of questions about to get it to what some folks are saying is a lofty valuation, China seems to be the number one thing that jumped out at me.
So China, big customer. Is the Chinese government, though, is there any investments in this company?
Absolutely. So ARM China is a different business than ARM. ARM is the company that's listing on the U.S. Stock Exchange. That is the one that filed this prospectus. ARM China is basically treated as a regular customer. They do have the same ownership. SoftBank does own a significant stake, a 48% stake in ARM China. But ARM warned in its IPO prospectus that this partner in China, they operate separately. They have no control over their business dealings. I'll also say there's been some drama with this company. This company's been pretty fraught if you're a semiconductor watcher. They had a CEO, Alan Wu, who in 2020 was fired for standing up a company that potentially conflicts with the business he was running in ARM China. He refused to step down. The legal system in China ruled in favor of ARM China, but that kind of drama is still up for appeal. So there could be governance issues at this all-important partner that ARM, who's filing it to go public in the US, has said they can't do business there without ARM China. So you have this kind of complex situation that when this company goes on its roadshow, when its SoftBank backers are going on its roadshow in September, as Bloomberg has reported, I can almost guarantee you that investors in the room are going to want to unpack some of these details because this is such a hefty chunk of their business.
That was Alex Barinka, technology and social media reporter for Bloomberg News.
And that wraps up our first hour of the weekend edition of Bloomberg Businessweek from Bloomberg Radio. Ahead in our next hour, we get into the pre-IPO world, aka venture capital, and the latest trends with the former chairman of Goldman Sachs Asset Management, Sheila Patel. She is now vice chair and general partner of the VC firm B Capital.
We're talking trash and the massive environmental impact it has on climate change with the CEO of publicly traded Republic Services.
We're really talking trash.
That was a good interview. And later we'll get into why containing big tech means defending our civil rights and democracy in the process.
Plus, we'll actually lighten the mood for you all, revisit the ultra-exclusive annual event for any gearhead. We're talking Monterey Car Week.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including talking trash, well, actually talking about the trash business with the president and CEO of one of the giants in waste management, Republic Services. And safe to say, I think this was one of our favorite interviews of the week.
Yeah, who knew talking trash was so fun, Carol?
You had a lot of fun with this.
I did, yeah. I'm going to read a book about trash, actually.
All I know is we're dividing things up more and more and more. So where does it go? That's what we talked about.
In the meantime, AI is still all the rage, including when it comes to VC. We catch up on the venture capital trends with Sheila Patel, Vice Chair and General Partner of B Capital. And then we'll ask a cybersecurity entrepreneur which mega-cap tech firms pose the biggest threat to our data privacy.
Dun, dun, dun. Stick around for that one. Plus, what you may have missed at Monterey Car Week.
First up this hour, it's a dirty job, but somebody's got to do it, Carol.
Average American throws out some 4.5 pounds of waste every day, which becomes 268 million tons of waste nationwide each year. 30 million tons of this waste is food, 27 million tons plastic, 18 million tons is paper and paperboard, not all of which gets recycled, Tim.
We're talking trash, garbage, waste, call it whatever you want. We produce a lot of it. It's got a massive environmental impact. It contributes to climate change. It also raises the question, Carol, what do we do with it and how can we be better about it?
John Vander Ark is president and CEO of the $46 billion market cap and publicly traded Republic Services based in Phoenix. Stock is up about 14% so far this year. Cascade Investments, an investment vehicle and holding company for Bill Gates, of course, the co-founder of Microsoft, is the top shareholder in the company with about 35% of the outstanding stock. Listen, it's great to have you here and talk to us about the business, the bulk of which, contributes to what moves the balance sheet. Give us some perspective.
Well, we're kind of a backdoor view of the economy because everybody has something they need to dispose of. So we serve small, households, we serve small business, we serve large business, we serve national players, governments. So we really get it. We have a very diversified book of business across our, almost $15 billion of revenue. And so that gives us a really good view of the economy, and we're very, spread out, and we're resilient, obviously, because even in a down economy, everyone is still going to have something they're going to dispose of.
So what's your view on the economy since you have such a good view and vantage point?
We're still cautiously optimistic, right? The recession, we keep reading about it and hearing about it, and it's not really showing up in our P&L yet. Now, I would say that.
But it doesn't, you say, because you're kind of resilient. But how do you pick up on it?
You'd see some decline, right? You think about maybe a 3 to 5% drop in demand, right? If an economy is really going to pull back and be in recession. So construction, for example, is a portion of our business, less than 10%, but that's down about 3% year over year. So we saw that commercial and residential start slow, certainly into last year, and we kind of have a 6 to 9 month lag effect on that. So that's down a little bit, but auto's down a little bit in the first half, but then the industrial side of the business is just booming.
What do you need to see in order to go from cautiously optimistic to optimistic?
Well, listen, when I see housing starts, kind of predicted to be up next year, I think that's, we'll probably slow a little bit on construction into the early part of the first half, but then we'll pick up in the second half. And listen, I don't think all of the indices are fully accounting for some of the government spending that's coming in on infrastructure spend, and we're certainly a beneficiary of that. So we're seeing that, hit our business, and again, very, very strong.
So when you say the industrial side of your business is strong, give us a little bit more color on that.
Yeah, two sides of think about a major petrochemical player, right? Yeah. They have a lot of things they need to dispose of. Certainly some recycling, but special waste, hazardous waste, a lot of environmental services in the middle of that we take advantage of that. Or think about a brownfield remediation, opportunity where, we're in the front of the line there. We're doing the dirt cleanup there, and we're taking all those materials and bringing those to the right spot.
Which is the bigger part of your business? Give us an idea. Is it that side, or is it just the regular trash?
Yeah, it's a funny business. It's about, if you measure based on our customer count, which is 14 million, it's 90+% B2C. So you think about the homeowner where we actually service. If you measure where dollars change hands, it's more than 90% B2B. because in most cities, the municipality contracts with us, and we consider that a business transaction.
Talk to me about these contracts, the moat, competitors that you have in some markets. What does the competitive landscape look like? Because every market is completely different. I don't know if you've spent time in New York City, but the trash collection cabal here is
easy peasy, never a problem, never see it on the sidewalks, never
wild.
see rats.
It's completely wild.
How much of recycling is part of the business?
It's a growing part of the business, kind of 15% and growing.
Yeah.
And again, we see that as a big growth driver. That solid waste is actually shrinking on a per capita basis.
Okay.
Is that a good thing?
What does solid waste mean?
That's garbage. That's industry
sorry.
talk for garbage. So garbage is shrinking on a per capita basis, and recycling is growing. And listen, that's our plan. We're trying to drive that diversion. And when I started 10 years ago, people used to say, well, we make all our money in landfills because that was our highest margin business. And I'm a customer person. I said, landfills don't pay us a dime. Customers pay us. And so you need to charge and understand what the product is worth. And that's what we've done. We've taken recycling pricing on the street to probably 80% of solid waste 5 years ago. It's now 120%.
What does that mean?
And we've grown it faster.
What does that mean?
So Matt, think about a small business and having 2 containers.
Right.
That the truck comes up and picks, once a week or twice a week. 5 years ago, the price of that recycling service was 80% of the price of the garbage service, and now we flipped it. It's 120% because we've priced recycling way faster and we've grown recycling faster.
Does it also mean people want to be recycling more?
We know, we do the customer insight work. People are passionate about recycling.
Yeah.
And they want to know it goes to the right spot.
Does it though?
In our case, absolutely, right? That's part of our environmental responsibility, which is one of our values. And I would say most of the time, yes. There are always corner cases where some smaller operator is not doing the right thing on the back end. But most of the time, you can have pretty good insurance that if you're putting it in the bin, it's going to get recycled. The
issue over the last few years has been there isn't really those countries left to buy our recycling like China used to do. Yeah. China's not doing it at the same rate that they used to. So where do these plastics go? Yeah,
when China kind of shut their doors, we went from about 35% of our material going abroad to 0 in about 3 months. Wow. And so what's happened is those value chains have really gotten repositioned. So there's a lot of domestic manufacturing that's come online, particularly for fiber and paper. So now our supply is almost entirely domestic.
What about plastic?
Plastics is interesting. So most plastics today, rigid plastics, get downcycled. So think of your water bottle, think of your detergent bottle. That goes into a pipe, park bench, or carpet. Now, that's good. It's not going to go in the landfill, so it's going to get a second life. But after that, that's going to go in the landfill. So we're forward integrating into that. So to try to take that water bottle and get it back into food grade quality. And so it can go right back into a water bottle. And then we think we can turn that individual polymer 6, 7, or 8 times before eventually it gets degraded.
Is it expensive to do that?
Yeah, we're investing about $300 million to produce 4 of these centers across the U.S. The first one opens up in Vegas here in a few months. And we've contracted with Coca-Cola. And listen, we could sell out of that center 5 times over. We had to limit people's buy on the back end because there's such a short supply for this recycled plastic.
So go back to what Tim said. Does it really get recycled? Because we have all gotten really good at dividing up our garbage in multiple ways. And the question is, does it all really get recycled? Does the paper get recycled? Does the plastic get recycled? What guarantee do we all have that it's being done? How do we know?
Well, listen, not everything that you put in the recycling container is recyclable.
Fair.
Right? So if you put the clamshell you might get at the grocery store, that might be made with some recycled plastic, but it's not recyclable. And so one of the things that we're pushing on is working now back upstream to say, how do we get more things in the original form of PET or HDPE, that's the water bottle, and the detergent bottle and milk jug, so that it can get recycled and keep getting recycled.
I thought there was a little triangle on that.
Yeah, if it has the triangle.
Yeah, that's made with post-consumer content. It doesn't mean that particular thing is recyclable. So there's a huge opportunity for education here because consumers care and they want to do the right thing.
I have to say, I stand over my recycle. I'm like, does this really get recycled? If I clean it, is it gonna go?
It sounds like you spend a lot of energy doing this.
I actually do. I do care.
Empty, clean, and dry. Those are the simple rules.
But not everything that has that thing
is not.
Can we work on that messaging?
We can.
I feel like I've been lied to for 30 years.
John, one thing I wanted to ask you is, we were talking about it off air, your company and Waste Management, top players in this industry, both with ties to Wayne Huizenga. How do you think about, and you've been at your company for a decade or so?
10 years, yeah.
How do you think about the evolution of kind of how we collect trash, where it was, where it's going, the evolution?
Sure, yeah. I can just tell from my tenure, we started, when I started, we talked about ourselves as a garbage company. And then it was a waste company. And then it was a waste and recycling company. And then a recycling waste company. And now a environmental services and a sustainability company. And that's not just
it market? That's what I was
That's just not marketing speak. That's actually where we're investing in the business. And again, I'm trying to challenge every ton that goes into a landfill, because hey, when I put it in a landfill, it's a cost to me. But if I can recycle it and reuse it and repurpose it, then I get a second benefit, a second stream from that. And by the way, landfills aren't being cited, right? That they're closing up. And so if I can extend the life of my landfill and I can get a second sale of that material in addition to collecting it, that's a win-win.
Many thanks to John Vander Ark, President and CEO of Republic Services, for joining us in our Bloomberg Interactive Brokers studio. The full conversation is available on our podcast feed.
Up next, we talk challenges and opportunities in the venture capital space with B Capital Vice Chair Sheila Patel.
You're listening to Bloomberg Businessweek. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Tim, this week we saw NVIDIA deliver a third straight sales forecast that surpassed Wall Street estimates. I mean, as you said at the top, a blowout quarter. The chipmaker's results fueled by surging demand for its AI processors.
NVIDIA saying sales will be about $16 billion in the 3 months that end in October. Analysts had estimated just $12.5 billion. That's according to data compiled by Bloomberg. NVIDIA's results last quarter also blew past projections, and the company approved an additional $25 billion in stock buybacks.
NVIDIA shares hitting a record following the quarterly update. Now, the tech fervor hasn't quite reached every corner of the investing world. According to data last month from research firm PitchBook, venture capital funding globally nearly halved in the first 6 months of 2023, highlighting a lack of investor interest and less demand and sharply higher interest rates. That's despite huge interest in AI startups sparked by the success in OpenAI's ChatGPT.
Yeah, investors poured more than $40 billion into AI startups in the past 6 months. That's according to the data, including the $10 billion investment by Microsoft in OpenAI and $1.3 billion in funding for rival Inflection AI.
All right, so let's get to it, because back with us to talk about what's going on when it comes to the VC world, and we're delighted to have her back with us, Sheila Patel. She's Vice Chair, General Partner of B Capital. She's former Chairman of Goldman Sachs Asset Management. She's with us on Zoom from Park City, Utah. Sheila, nice to be talking with you again. Last time I think it was at the Milken Institute Global Conference in May. How are you? And talk to us about your world and how things have changed.
I'm great. Thank you so much. And it's so great to chat with you again. I think the world since Milken has had some good news, had some rougher news. But overall, I think it's been a fascinating period to see how investor sentiment hasn't necessarily responded to some of the good news we're seeing on the economy, and particularly among public companies on profits and so on. So there's a lot out there to look to. But as you pointed out in opening this, when it comes to venture, there are definitely some challenges, and it'll be fun to chat about them with you.
Well, let's talk about the challenges first, and then I want to talk about the opportunities. So it's been choppy waters, certainly, given higher interest rates and a pullback on funding. And we've seen some venture-backed companies cease to exist, cease to operate. It's a different world than it was in 2020 and 2021. What are the challenges that you're seeing at B Capital?
Well, I think, along with the entire VC community, we certainly see challenges, as you mentioned, in terms of investor interest. And I think institutional investors' data, a survey of about 44 LPs, showed that almost 3/4 would allocate less to VC next year. Now, many of them have been strong allocators and supporters, and I think they'll be back. But I think there's definitely concern over valuations. And that's where sometimes challenging news can end up being good news. We've been very fortunate in being able to raise our latest fund, Growth Fund 3, and beat our goals with that. And you have seen several VC firms, particularly some of the largest, have some success raising money. I think because of those other themes that you mentioned, the interest in AI, the focus on areas where tech really can be additive in up and down markets. And that in many cases is enterprise and fintech, which are areas in which B Capital operates. So I think there's some high points, but in particular, investors are looking to really make sure that the people they give money to are focused on these questions of valuations. And that's where the data has really been stark and is the opportunity, maybe the silver lining to the cloud, so to speak, because valuations have come in and it means there are great opportunities to find good tech companies at much more reasonable and appropriate valuations.
Hey, Sheila, is AI actually helping you guys find better opportunities right now and able to go through maybe a lot more deals and figure out what really makes sense?
Yeah, I think applying AI to deal flow and to analysis goes hand in hand with looking at how our companies are using AI. And certainly I would say it's been an amazing partnership talking about AI with our strategic partner, BCG. When you look at the work that BCG has put in at all levels of corporate America and global corporates and thought about how to apply AI to solving some of the problems they're facing, it has really helped us take it in-house and think about ways to apply it in our own investing and our application of analyzing potential portfolio companies.
But I guess what I'm also wondering too, has something fundamentally, it's interesting to hear what you say about, investor interest when it comes to VC. Is there something fundamentally structurally going on? We talk a lot about, I think we did at Milken, the private credit markets and the amount of money that's out there. I mean, is there something structurally, fundamentally going on that's changing the VC world? Or is it like it's always been? Yeah.
Look, I guess I'll put my longer term hat on. It, to me, is the maturation of a segment of investing, just like we've seen other areas go through. There was a moment when index investing was young and new and some crazy valuations, some crazy structures, lots of things went on. And now it's a typical part of people's investment portfolios. I think when I look at venture and I compare it to the history, my 20 years at Goldman, my 30 years in the industry, and watching various areas come into their own, such as quant, even hedge funds, and private equity, they go through a maturation process, and I think it's a natural evolution. To me, I look at venture, and maybe it's because I'm one of the old people in venture. That's how young an industry it is. It's filled with amazing technology experts, but maybe you haven't seen as many market cycles. And at the end of the day, VC has to perform the same as other areas, and that maturation is part of why you see some funds able to cope with the changing environment, the same as you see some portfolio companies coping better with a more difficult funding environment.
So talk to me about two opportunities in two senses of the word. One, geographically, where are you deploying money? And then also, what types of companies excite you right now?
Sure. Well, maybe I'll start with the last first, because I think it ties into that question of AI. I think that we spend so much time, and maybe this is a trend in general on the downside of certain technologies or of things in general, that the upsides sometimes get missed. And when I look at AI, I look at the way it can turbo boost drug discovery and research in areas that will be really important in a climate changing world, like crop protection. So a company like Atomwise, which is one of our portfolio companies, a small molecule expert partnering with the world's leading pharmaceuticals, biotechs, agrochemical companies to discover new ways and new treatments, whether drug treatments or whether crop protection, et cetera. So I think that's an incredible area for focus for AI, is drug discovery, small molecule work that can go beyond medications into other applications, industrial applications. That's amazing to me. And then, when I think about that broader question on opportunity, I think that what we have to look to is the longer term prospect for some of these companies when you have a lower valuation to start with. And that means from an investor perspective, right, you want to be sure that challenging valuations, you're challenging companies on the levels they're looking to raise.
That's Sheila Patel, former chairman of Goldman Sachs Asset Management, now vice chair and general partner of B Capital.
Still to come on Bloomberg Businessweek, what we're giving up as investors keep upping their bets on Silicon Valley's biggest names, our privacy.
We're now in a situation where especially the larger tech companies are really just over collecting so much information about us. And, in the past, companies like Standard Oil were powerful, but they didn't know everything about us. And that was the really, when seeing the hacks and seeing all this data sloshing around really made me say, something's going on here.
Entrepreneur and investor Tom Kemp details his playbook for containing big tech while also protecting our civil rights. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business App, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, Carol, I'm reading a book right now. Actually, Jason Kelly, your former co-anchor here on Bloomberg Businessweek, he recommended it to me. He recommended it to me a couple of years ago. I'm a little behind.
That's okay.
I bought it
You
then.
got to
Found
it.
it on
You
my
got to
Kindle
it.
recently. I'm getting around to reading it. It's called The Every. It's by Dave Eggers. It takes place in a not so distant dystopian future where one single huge tech company pretty much controls everything from social media to e-commerce to search.
Wait, aren't we there? Oh, no, sorry.
Well, that's a good
Close.
question. Here's the thing. Almost everyone lives under constant surveillance. There are cameras everywhere. People broadcast their entire lives. Everybody's on their best behavior, lest they be caught on camera saying the wrong thing or not recycling.
Oh my, what?
Yeah.
All right, so given where technology is today, it's actually not that hard of a future to imagine. And perhaps our next guest is trying to prevent the world from emerging, that specific world. So we've got with us Tom Kemp.
Yeah, he's the author of a new book, Containing Big Tech, How to Protect Our Civil Rights, Economy, and Democracy. He's also co-founder of the cybersecurity firm Centrify. It's now called Delinea. It was bought by Thoma Bravo back in 2019 and later by TPG. He's volunteered on the Biden-Harris tech policy team. He did that in 2020. He worked with advocacy groups for years on legislation around consumer privacy and data protection. He joins us on Zoom from Menlo Park, California. I want to know at the specific moment that you realized that you thought that big tech needed to be contained.
Well, my last company was Centrify, and it's cybersecurity. And we saw all these hacks coming in, and it really became clear that when a couple of these companies got breached, just the incredible amounts of data that was being accessed by the bad guys, it really got me to appreciate that we're now in a situation where especially the larger tech companies are really just over collecting so much information about us. And, in the past, companies like Standard Oil were powerful, but they didn't know everything about us. And that was the really, when seeing the hacks and seeing all this data sloshing around really made me say, something's going on here.
All right, Tom, I'm going to put it out there. I'm going for a headline here. But is it like climate change, or maybe like climate change, that we might just be too late, that this train has definitely left the station?
I think we actually, because it's bits and bytes versus the sky and clouds and the earth rotating and trees and all that stuff, I think we can actually control it. I mean, the fundamental issue is in the US, we don't have a federal privacy law, right? We don't have rights over our data, the right to know what's being collected about us, the right to say no and say, please don't sell or share my data, or the right to correct or right to delete. So I do think that we could really make some significant strides and be able to govern our information. And if we don't, frankly, it is going to get worse with AI, because then all of a sudden our data, and a lot of it's our personal data, kind of becomes part of this big blender of AI, utilizing our data to create other things as well. And we worry about copyrights, right? But what about our data?
Well, what about, do we follow the lead of what's going on in Europe? And I think about the GDPR, right? The General Data Protection Regulation that's out there that really does push for privacy protections and security of personal data. Is that what we need here in the United States specifically? Is that what you're kind of pushing for?
Well, actually, we've done it here in California. So, I mean, you're referring to Europe's privacy law, and people call it the Brussels effect. But California, we've historically had the California effect. It first started with auto emissions and consumer protection around car safety, et cetera. And then California in 1972 actually put privacy as an inalienable right into our Constitution. And from a privacy and cybersecurity perspective, we were the first state to actually pass a data breach notification law, right? And we are and have been the first state with the most comprehensive privacy law. So I think California actually has a better model where it's able to balance innovation with the tech players, but also give consumers some basic rights over their data and how it's used.
Tom, you're also a seed investor in many startups right now. They include companies with names like Secuvi, Privacy Code, Trusted Twin, Ivy Technology, Share ID, Sunday Security, Surf Security, Holistic AI. The list goes on. The cynic and perhaps somebody would say, well, wait a second. This guy's has this agenda because he's invested in a lot of companies that want to take on the big guys. He's invested in a lot of companies that would benefit from having stricter data protection laws here in the US. What would you say to that?
Well, maybe this is a bad analogy, but Al Gore, you mentioned climate change. He was talking about climate change for years, and then, he was having difficulties trying to get things passed from a policy perspective, but so he wanted to have change done. So he started joining boards, and he's on the board of Apple, but he's also involved in climate funds. So everything that I've been talking about as it relates to privacy in the book is things that I've written years ago, well before I actually started doing any investing. And so I'm trying to put my time and effort into making changes. And what I'm doing with my investments is actually trying to empower consumers to better secure them and protect themselves. So my investments tend to be more consumer-centric and trying to help stop identity theft or help people get better control over their privacy as well. So, but I've been completely consistent. I have a blog that's been out there for years. I've talked about these things. I was a full-time volunteer on Proposition 24 in California, and it wasn't only till just relatively recently that I've been complementing and supplementing this, but I've been completely consistent in my advocacy of better cybersecurity, better privacy for you, me, and other people as well. And so, yeah, people can say that, but but the record shows that I've consistently been talking about this and proposing this for years.
Well, and on what you said, if we go along with what you kind of said akin to what we saw with Al Gore, he was right in terms of the concerns about climate change. Yeah. And so if we had all paid a lot more attention, maybe we wouldn't be kind of in the world we are today. If you are right about your concerns and we ignore them in terms of cybersecurity, what's the dark scenario, the dystopian scenario of all of this data accumulation on all of us in the hands of a few big tech companies?
Well, look, historically, the large tech companies, their business models was advertising. And for us, we made that trade-off to say, okay, I'm going to give you all this data and you're going to give me these free services. And then what happened was that we started shopping for a red dress or red basketball shoes, and then all of a sudden, for the next 7 weeks, every web page had that red dress or those red basketball shoes.
We've all been there.
It was annoying. It was creepy.
Try being a journalist and researching a company that we're going to have on a guest that does something like men's underwear, and then we're getting it.
That's why, Carol?
Absolutely.
That's why?
Yeah. Sorry. Anyway, go ahead.
It's creepy, but the problem is that we are now in a post-abortion rights America where stuff that we did before is actually illegal in some states, or there's data there's all these issues about trans. And so the information and that type of data is now actually can be used against people, because before it was offered to advertisers, but it could be offered to people to harass or discriminate against people as well. And so, but even if you just step even further back, the reality is that this data is being collected about us as adults. And yeah, maybe we can navigate around some of the rabbit holes or not disregard these ads. But what about our kids? There's no differentiation if our kids are on the keyboard versus us on the keyboard. And I think that's fundamentally unhealthy. So yes, I think that the actors have figured out how to start weaponizing this data that historically has been used for advertising.
A big thanks to Tom Kemp. He's the author of a new book, Containing Big Tech: How to Protect Our Civil Rights, Economy, and Democracy. And check out our podcast feed for more on AI in the corporate world and how Tom Kemp says those mega cap tech companies, specifically Alphabet and Meta, are collecting information that could compromise their users down the road.
Speaking of the road, you're listening to Bloomberg Businessweek. Coming up, spending $30 million without really trying.
We go behind the wheel with our own auto guru, Hannah Elliott, at Monterey Car Week. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business App. Or watch us live on YouTube.
Speaking about money, if you happen to have a spare $30 million lying around, there are a few things you could do. I could take a lot of really nice vacations, a lot of really nice vacations.
Maybe a lifetime of nice vacations.
You could buy some pretty great second, third, and fourth homes. Maybe fill up the 529s for your kids. Sounds like Tim wrote this.
Yep, I did.
And grandkids, so they won't have to worry about paying for college. I mean, there's a lot you could do with $30 million.
Or
Dun, dun,
you
dun,
could
dun.
buy just one single Rolls-Royce drop tail. After all, only 4 of them will be made. And I use this $30 million price tag. I use that really loosely.
Yeah.
Because we don't actually know how much it's going to cost. But it costs, it's like 28 million was one a few years ago. 30 million, it's like how much it costs to make. So it's going to be around that area. You know what, Carol, if you have to ask, you can't afford it. Okay.
You sound like my mother. All right, so let's get to it. Hannah Elliott's with us, auto columnist for Bloomberg Pursuits. She was at the Monterey Car Week. She was there. She writes not just about Rolls-Royce's latest in its coach-built series, but also the electric hypercars and hydrogen SUVs that she saw. She's on Zoom in LA. Let's get to it, Hannah. First of all, this is the car show, I feel like, to go to. Tell us about it.
Hi, guys. Yeah, I have to say Monterey Car Week is definitely the new car show. When I say new, I mean it has taken the place of like the Detroit Auto Show or the New York Auto Show in terms of important sport new car debuts, like that $30 million Rolls-Royce that you described. It's the place to be both for industry and for enthusiasts and collectors, I have to say. And yes, that drop tail is incredible. I think, it's well over 30 million, according to my source at Rolls-Royce, who didn't want to specify, but said, it's definitely more than 30. And kind of a car designed from scratch, basically. That's what 30 million gets you, 30 million plus.
Can you talk about it? It is gorgeous. And of course, we're on YouTube and Bloomberg Originals, so we'll show some pictures for those folks. But for those on radio, just tell us about it.
Yeah, so this is part of Rolls-Royce's coach-built series. This is the third vehicle in this series. It started with the swept tail in 2017, and then the boat tail in 2021. You might remember those. This drop tail is the third, and what coach-built means is Rolls-Royce selects some of their most enthusiastic buyers and collectors and says to them basically, we will design whatever car you want. Now, they use the same V12 engine that is found in the Rolls-Royce Ghost. But aside from that, it's kind of whatever the client wants. The car is mostly shown as a roadster, but it does come with a hardtop made out of carbon fiber. So it's a lot of car.
Tell us about one more car that you saw.
Okay, this is the other end of the spectrum, and you're going to be surprised, but I want to talk about the Ford Mustang GTD. This was kind of a shocker because Ford isn't always at Monterey, but they brought a 800-power V8 Mustang that costs over $300,000, which is a lot for Mustang. It's getting a lot of buzz. Of course, Mustang is, the original American pony car. So there's a lot of enthusiasm behind it. And Ford has said, we're going straight after Porsche with this car. So we'll see if they can pull it off.
That was Bloomberg Pursuits auto columnist Hannah Elliott. And for the classic car lovers, do not worry. There were some old school cars driving around in Monterey last weekend. Hannah telling us about a 1964 Ferrari. It sold at auction for a cool $30 million. So, Carol, a little something for everyone as long as everyone brings big bags of money.
Buckets and buckets. Hey, check out her story online, too. Some great pictures and the full rundown of some of the highlights that she saw while there. That wraps up the weekend edition of Bloomberg Business Week from Bloomberg Radio. Thank you so much for joining us.
Be sure to tune into Bloomberg Business Week Monday through Friday. It starts at 3 p.m. Wall Street time on Bloomberg Radio and on Sirius XM channel 119.
You can also watch our daily broadcast on YouTube. Just search Bloomberg Global News. We're simulcast on Bloomberg Originals, available at Bloomberg.com/originals, and streaming platforms such as Roku, Amazon Fire TV, Samsung TV Plus, and more.
Find our Bloomberg Business Week podcast at Bloomberg.com, Apple, or wherever you get your podcasts. The latest edition of the magazine is available on newsstands now at Bloomberg.com and always on the Bloomberg terminal. I'm Tim Stenovec.
Did you buy that $30 million car?
I did not.
All right, just checking. I'm Carol Massar. Have a good and safe weekend, everyone. Stay with us. Today's top stories and global business headlines are coming up right now.